I've been sounding the alarm about the coming inflation crisis, and our corporations have confirmed our worst fears. Unprecedented price increases are about to be passed on to customers as commodities and material prices skyrocket. In this video, I'm going to be going over the latest information we have from major corporations that confirm inflation is coming, inflation is here, and what this means for you. I'm also going to go over what this means for the Fed, interest rates, and the markets. Not only this, but I'll go over how we can prepare for the coming inflation crisis, hedge our positions, and profit from the situation. Okay, let's get into it. Procter & Gamble and Coca-Cola have been the first major companies to announce price increases are coming to hedge against increasing commodity prices. So like I was saying in some of my other videos, I do think commodities are going to enter a new super cycle, and a way to hedge against this is going to be to put a portion of your portfolio in the major commodity indexes. Fortunately for most of my viewers here are financially savvy enough to do this, but unfortunately the lower and middle class, most average Americans and people around the world aren't going to know this information, and this is going to make the cost of living unbearable for the poor and the middle class. And also it says here that companies are going to try to find savvy ways so the customers don't notice the price increases straight away, which I'll get into later in the video. So like I've been saying, and like our community here has been saying, inflation is coming. It's going to be much higher than the official CPI data. It's going to be much higher than the Fed says. The reason for that is because they can't afford to repay the debt if interest rates rise. And it seems like they don't want price stability anymore. All they want is price bubbles and prices going up vertically. Listen to this. Look no further than Coca-Cola and Procter & Gamble sharing plans this week to raise prices to offset rising commodity costs. The cost of raw materials ranging from lumber to resin are surging, so companies are taking steps to protect their profits. So this is what the major corporations are doing to hedge against price increases and to hedge against inflation. And this is actually what we can do as average Joes as well, is you have to do your research because commodities are very volatile and it's a very complex market. But if you do your research, you can use commodities as a hedge against rising consumer costs and against your grocery bill going up. But I'll get more into that later. Have a listen to this, and this is absolutely crazy, and this just confirms what we've been talking about. ING Chief International Economist James Knightley is forecasting consumer prices will continue to rise in the near term and could gain almost 4% by May. That's right, 4%. Double the Federal Reserve's mandate. And this is the official numbers. You can bet real inflation is much higher than that. It's at least double, I think. And the CPI is already above the Fed's mandate of 2%. For the past year, from March to March, year on year, the CPI index has risen 2.6%. But the Federal Reserve keeps saying, no, this is only temporary. Well, even if it is only temporary and say it goes up 6%, well, now inflation is compounding at a higher number. And we all know how powerful compound interest is and compounding. So even if it does drop a little bit, your cost of living will be increasing at a higher rate. Have a look at this chart and tell me if you agree with this. Groceries, according to this chart, are up 2.6%. Household care is up 5.2%. Baby care is up 7%. And general merchandise is up 7.1%. So guys, the cost of everything is going up out of control, but the government and federal banks are letting it happen. They're destroying everyone's purchasing power by devaluing the dollar. They're taxing you by increasing inflation. They're printing money like crazy. They're taking on huge amounts of debt like crazy. They're saying it's not a problem, but then they're saying we need to tax you more and we need the prices of everything to go up. This is just a complete scam, and just using common sense logic, it sounds like a Ponzi scheme. And I wish more and more of the average Joes knew how the financial system worked, because if they did, people wouldn't be protesting about, the soccer league and the Super League or whatever's going in the soccer. I don't really follow soccer that much. It's funny how there's so much anger about soccer and football, but people don't understand how the financial system is literally destroying their livelihoods. So let's have a look at some of the tricks these companies are using, so hopefully you don't notice these price increases. Listen to this. Consumer companies across the board have gotten very savvy about how to implement price increases without slapping on 5 to 10% price increases. Some of their methods include using smaller packaging. I'm seeing that everywhere. I remember I used to get a triple cheeseburger when I was young. Now when I get a triple cheeseburger at Macca's, which I'm sure you can probably tell, I get a few triple cheesies. A triple cheeseburger today is almost the size of what a cheeseburger used to be when I was young. When I get the burger, it's about this big. Selling smaller size packs for the same price or offering promotions that bring price down until consumers are used to higher sticker prices. So that's another trick they use. They'll lift the price, but then they'll put it on special for a little while. So you think, oh, I don't really notice it, until that special goes away. And then people kind of get used to that higher price. And then they take that special away and now you're paying more. And listen to this. This is the power that major corporations have over small businesses. Hedging positions may also give some manufacturers like Coke and Pepsi more flexibility to raise their prices gradually because they won't feel the impact of high commodity costs for several quarters. And that's because they lock in prices through future contracts. They lock in huge amounts of supplies so they can get products on wholesale prices. They also can get discounts because they can order more and demand better prices. But small businesses don't have that kind of power. And really what we're seeing is the major corporations get bigger and small mom and pop shops getting destroyed. It's just more and more centralization, which is what we don't need right now. We need decentralization. Also, what's happening to increase the prices at your grocery store that you may not notice is there's less and less discounts now because of all the demand and all the crazy manic buying. What we saw over the past year was crazy FOMO and crazy buying. People were just buying up everything in the grocery store. So now companies don't have to give as much discounts. And last year it was about 31.5% of units were sold on promotion, but now that's dropped to just 28.6%. And of course, JP Morgan and the investment banks want to cash in on this, and this may be a way we can hedge our positions as well. Listen to what they said. JP Morgan analyst Ken Goldman wrote in a note to clients on Monday that higher prices would help food retailers, particularly as they face tough comparisons to last year's skyrocketing demand. And that was what I've been saying in previous videos. If you want to hedge against inflation, what you could do is invest in some of the big food retailer ETFs or indexes or individual stocks, because as inflation increases and the costs of everything go up and there's more demand for these items, and these stocks are generally better valued compared to these high growth, high PE, crazy valuation tech stocks like we've seen over the past year. So let's get into how this is going to affect the stock market, the commodities market, cryptocurrency market, housing market, what this means for you and me, and how we can prepare. So first things first, what I think this is going to do and what I hope happens is the Federal Reserve and central banks around the world finally get their act together, start tightening the quantitative easing, start slowing down the money printing to get inflation under control, and they need to lift interest rates. What they did is they dropped interest rates far too quickly because they thought the problem was going to be way worse. But now the economy is absolutely booming and the cost of everything is skyrocketing, and they're just sitting back and watching everything heat up. And what could happen, and what I think will happen, is that over the coming few months, the inflation numbers are going to get higher and higher. And I think we could start seeing central banks, not just the Federal Reserve, but central banks around the world, and even the Canadian central bank has said they may do this in early 2022. We may start to see interest rates rise. And if that happens, the stock market is going to have to correct, especially the NASDAQ and the high growth tech stocks, because interest rates affect these high growth tech stocks. Value stocks won't be affected as much. And in the housing market, like I said, it will hopefully finally cool this crazy housing market that we have at the moment. It has become manic and uncontrollable. The price increases March on March in the US have increased to 17%. That's right, the biggest price increases on record, not just 2007, not just 2008. This is the biggest year-on-year price increase for the housing market in the US on record. But with increasing supply, with a lot of new construction starting, which will hopefully help with supply, and if interest rates go up just 1%, we could see the housing market correct by 10 to 15%. And if interest rates go up 2-3%, if inflation does get out of control, then we're going to see a full-on housing market and stock market crash. If interest rates increase just 3%, we could see the housing market and stock market decline anywhere between 30 and 50%. Now, I have had some few people comment below and said, well, no, we're actually going to have deflation. And while I agree we should be having deflation, and deflation should just be a normal thing, and I think deflation is actually better, because as technology evolves, people can create things cheaper, faster, people get more productive. With better technology, the costs of things reduce, and naturally prices should go down. But unfortunately, that's not the system that we have at the moment. And inflation is going to continue, and inflation is going to get worse because the government and the suppliers and corporations, they're manipulating the markets to make sure inflation keeps going up because they need to devalue the debt. And also with inflation rising, that means more taxes for the government, to fund their crazy spending spree. And this is why I say the wealth effect is a scam. They say, oh, it's so good, the stock market, housing market's going up, you're all gonna be rich, yay. While it is good for those that have maybe $1 million to $2 million net worth, it is good for them because their cost of living is a much more smaller percentage of their income. But for the poor and for the middle class, where the cost of living is pretty much all of their income and they don't have $1 million to $2 million in assets, this is devastating for them. And even if you're an average Joe and you got 100,000 in the stock market, if the cost of everything is rising faster than your investments, or it's rising faster than your house price is going up, you're actually losing. But okay, so those are all the problems and those are the issues. So what can we do to protect ourselves right now? Okay, this is not financial advice, but what I'm doing and what I think is the best bet against inflation, and like I said in my previous videos, is I think we're going to see a new commodity super cycle. And I've been looking for what is going to be the best performing asset over the next 5 to 10 years, because the stock market's at all-time highs, the housing market's all-time highs. I already got into Bitcoin, was around $5,000 to $10,000, and that's already had a crazy run up. But as I've been studying more and more about commodities, and I still have a lot to learn about commodities, I'm still doing lots of research. But what I have learned from my research is they're significantly undervalued compared to the historic averages. And also commodities aren't correlated with the stock market and with the housing market and with the economy overall. If the stock market and housing market crashes, commodities will continue to rise if inflation keeps going up at the rate that it is. And also with all the supply chain disruptions, with the huge amounts of infrastructure that's being created around the world, with the EV movement, with the renewable energy movement, with the green movement that's happening right now, there's going to be huge demand for commodities. And many commodities are actually lower than they were 30 years ago. And that's what corporations are doing right now to hedge their bets too. They're investing in commodities, but this is something you're not seeing in the mainstream media, and you're not seeing many big financial YouTubers talking about, because all the money that they make is from people investing in the stock market and the housing market. They don't make much money off you investing in commodities. So that's why they won't really report or tell you to invest in this. So that's just my thoughts and opinion on what I think is going to be a good hedge against inflation and also to profit from the coming inflation. Comment down below what you think is the best bet. For all my loyal viewers and subscribers still watching, you're awesome. If you haven't already, please tap that like and subscribe button. I'll keep you up to date on the latest housing market, stock market, and global finance news. If you're interested, I'll leave a link in the comment section. You can get 2 free stocks with Webull valued up to $1,800. For my Australian viewers wanting to invest in the US, the app I use is Stake. You can use the link in description to get a free stock in GoPro, Nike, or Dropbox valued up to $150. Thanks again for watching. If you're bored, I'll put up some other videos here. I'll see you there.